They have filled the can with cement, and every time they kick it now, there's more pain. And the internals of the financial system and the stock market are so dreadful. I don't believe it can be kicked further down the road. I've been saying for the last 6 months that I thought there would be a market crash in October, and I'm going to move that up a little bit. I thought the market would top in early September, like it did in 1929, but the market has clearly topped now. So I think the next 6 weeks, 2 months, there will be a clear crash.
Bob Moriarty, the founder of 321gold.com, has been warning about an impending market collapse for a few months. But the warning period is over, Moriarty recently revealed during an interview with Liberty and Finance. According to the veteran investor and war veteran, the most destructive crash in financial history might be only a few weeks away. Moriarty believes policymakers have been able to kick the can so far down the road, but they will not be so lucky this time. To begin with, he expects a stronger and more destructive return of the U.S. banking sector crisis, beginning with last week's PacWest takeover. Last week, PacWest announced it would be acquired by Banc of California to stop another regional banking crisis, the likes of which took out several banks earlier in the year. The deal is an all-stock sale, which saw PacWest stakeholders receive 0.6569 of a Banc of California common share for each PacWest common share they own. PacWest stock has fallen over 60% year-to-date. According to Moriarty, many more banks, which are already showing signs of collapse, will fail in a crash that could rival the 2008 global financial crisis. The veteran investor also discusses the recent downgrade of the U.S. government's credit rating from the top level of AAA to a notch lower at AA+. Moriarty believes this would be the factor that would send the stock market crashing and disrupt the Fed's fragile plan to avoid a recession and keep up appearances that the economy is strong and stable. We will now bring you clips from Moriarty's interview with Liberty and Finance. You can help the video reach more viewers by smashing the like button and subscribing to the channel. Also, ensure you drop your comments and observations in the comments section below. Thanks, and enjoy the video.
It's something that we've discussed at some length, and we have already had more banks collapse in March than collapsed in 2008. They've been holding back the dam, but it appears the dam is bursting now. And there was a piece I posted 2 days ago. Half of U.S. banks with $11 trillion in assets have lower asset value compared to debt liabilities. Their asset value is $2.2 trillion lower than their book value. So literally, I mean, what they're saying is half the banks in the United States are bankrupt right now. And when they go, they'll take the rest of the banks. Now, there's several things that are very important to notice here. The IMF just allowed the Chinese yuan to be used as a currency to settle accounts. That's a really big deal. It's something that would be invisible to most people. That's a big deal. And second of all, the credit rating of the U.S. government has just been lowered. We have had record highs in the Dow and the S&P and the NASDAQ literally up until a few days ago. And I think lowering the credit rating is pulling the plug on the financial system. We'll see very soon. I think I've used this analogy before. When an avalanche starts, it starts with a single piece of snow, and it starts at the top. So we had a top in the S&P, and we had a top in the Dow, we had a top in the NASDAQ. As fragile as the financial system is, it hasn't shown up in the stock market, and lowering the debt rating is the pin that the balloon.
Now that we have seen the debt downgrade, do you see banks to fall faster going forward here?
I'm not sure anybody can predict that. Certainly the powers that be are trying to cover it up. It's like a cat in a litter box, okay? Once they crack, they do their very best to cover it up and pretend it doesn't exist. They've done an excellent job, and I thought back in March it would be cascading immediately, and it obviously hasn't been. But the piece I just sent you from 2 days ago, half of the banks in the U.S. Are worth 20% less, or have a negative 20% value. If they got $100 billion in market cap, they've only got 80 billion in assets. So the banking system is extremely fragile, and that's true throughout the world. We have discussed the quandary the Fed is in. If they keep raising interest rates, they blow the system up. If they lower interest rates, we get hyperinflation, and they chose to blow the system up. And that's what the credit agencies just said. The question is, will it collapse organically, or will somebody pull the plug? And I think the answer is it is collapsing organically, and the credit agencies will be blamed for it. But it was going to happen anyway.
Do you see that a world war is very likely at the moment, or could we somehow escape that?
My gut feel says I don't think there will be a world war, because the idiots in Washington are having to face the fact that every lie they've been telling for the last 18 months has floated to the surface. And now everyone realizes Ukraine was corrupt. Ukraine is corrupt. The money was all stolen. There are no weapons left to give them. And they have destroyed, and I mean Ukraine has destroyed Ukraine. There have been hundreds of thousands of soldiers killed for no purpose whatsoever. Putin and Lavrov were absolutely clear about what they were demanding. How stupid can Poland and NATO and the United States be? And I think they're at peak stupidity now. And I don't think there will be a world war, but Ukraine and NATO and the U.S. have lost catastrophically.
There are lots and lots of signs of an impending collapse in the markets and the overall economy. A few days ago, Fitch, one of the three major independent agencies that assess creditworthiness, downgraded the U.S. government's credit rating from AAA to AA+. The agency said it had noted a steady deterioration in governance over the last 20 years. Reacting to the news, U.S. Treasury Secretary Janet Yellen described the downgrade as arbitrary. She said it was based on outdated data from 2018 to 2020. Her vague explanation might not be reassuring for investors that use the credit ratings to judge the government's creditworthiness. In a statement, Fitch said, "The rating downgrade of the United States reflects the expected fiscal deterioration over the next 3 years, a high and growing general government debt burden, and the erosion of governance relative to peers." In Fitch's view, there has been a steady deterioration in standards of governance over the last 20 years, including on fiscal and debt matters, notwithstanding the June bipartisan agreement to suspend the debt limit until January 2025. What are your thoughts on Bob Moriarty's predictions about a coming crash in the United States? Please drop your comments and observations in the comments section below. Also, ensure you subscribe to the channel, turn on post notifications, and check out our other videos. Thanks for watching.